What is fast money and how does it work? Let's define what the smart money is. Smart money is the capital that institutional investors, market mavens, central banks, funds, and other financial professionals control. It was originally a gambling concept that applied to the wagers made by gamblers with a track record of success. Not all funds can be called professional, and some lack the resources or skill to really drive the markets. Smaller funds typically do not have sufficient resources to position market orders capable of controlling the movement of prices. Generally, banks are the traders with the largest amount of money. Banks make up 60% or so of the forex markets. More information and insights about the markets is available to them. Both hedge funds and investment banks have large teams of individuals monitoring the market constantly. Before the rest of the business, they still pay tons of money to get access to news. Understanding smart money. The world understands that smart money is spent by those with a greater understanding of the market or with knowledge that cannot be reached by a typical investor. As such, when the trading habits of institutional investors diverge from retail investors, smart money is perceived to have a better chance of success. Smart money also applies to big money's collective influence that can drive markets. The central bank is the force behind smart money in this case, and individual trader ride the coattails of smart money. Identifying smart money. Conventional wisdom holds that more is usually invested by insiders and knowledgeable speculators, so it should follow that smart money is often recognized by greater than usual trading volume, particularly when there is little to no public data to support the volume. However, there is very little evidence to support the commonly held suspicion. The pricing of stock and index options is one source of information that is provided almost entirely by more knowledgeable market participants. For untrained investors and traders, such information is complicated and misleading, so it naturally serves as is used by a more educated group of market participants. For institutional investors who want to ride the coattails of smart money investors, knowing who the holders are of smart money and where they invest can be of great benefit. To group transaction data from commercial and non-commercial traders, some data providers use different methods and data sources. The Engagement of Traders report is regarded as one such source. The Commodity Futures Trading Commission publishes this data on a weekly basis. This information is used by many analysts to break futures trading activity into actions taken by better informed investors. The recognizable variations in how the two groups place themselves in the market should be highlighted by every such smart money versus dumb money chart analysis. Chart readers should, however, be mindful that a chart analysis that marks price behavior as smart money or dumb money is vulnerable to invalid characterizations. Not every investment action can alone convey the intent of the investors through the price action. In addition, a given individual's returns and even most experienced portfolio managers are frequently unable to match the returns of investing in the mechanical index over time. How to track smart money. When the broad market is about to transform and what a certain stock can do before anyone else has an idea, or so it seems, the smart cash understands. In fact, investors of smart money have vast analysis and analytical tools that you don't have. They are the specialist managers of investment funds who are responsible for billions of dollars of customer cash, so they should have the best data. They just pass too much capital around, they start to impact the company. You will find out what they are doing and go along for the ride if you know what to look for. Number 1, find a charting service. Find an interactive online charting service that shows volume on balance. It is an indicator which is widely used. Interactive stock price charts are offered by most major online trading firms that provide OBV as a technological overlay of indicators. Put in your stock symbol and choose the format of the OHLC chart that stands for open, big, low, and near. It is a bar chart that makes it easy to see the price range for a stock in a given time span, ranging from every 5 minutes to every day, week, or month, depending on the number of years you are charting. Number 2, note OBV activity. Select the indicator for the on-balance volume map overlay. Generally, it is seen as OBV. It will appear as a line chart and will quickly show whether the OBV is leading the market or lagging. If it is placed above the bar price chart, notice if when prices are in an uptrend, OBV makes new highs or makes fresh lows when prices are in a downtrend. In regular trade, this is how it should look. If it looks different, however, you might see signs of the smart money movement. A stable OBV or new highs in a downtrend means that smart cash will accumulate stock in anticipation of a run-up. It is possible that smart money will take profits and move out of its portfolio positions if OBV creates new lows or lags in advancing market. Number 3, other tracking considerations. In order to find a good investment before it makes its move or get out before it falls, on-balance volume can be used for single stocks. With indices such as Dow Jones, Industrial Average, or the S&P 500, OBV can also be used to predict the future trajectory of the broad market. Always confirm by checking other indicators, the indications provided by OBV. The Relative Strength Index indicates situations that are overbought or oversold. In order to spot a shift in monument, trend, and direction of a stock, the moving average convergence divergence is used. Most useful are trend lines, moving averages, and other technical indicators. Technical indicators are not always easy to correctly interpret, and the action could already have passed by the time you notice a possible accumulation or sell-off of the smart cash. In addition, professionals also take advantage of their ability to move immense amounts quickly by machine trading in and out of the market, creating an appearance that the market is about to move. Be prepared for what traders call a whipsaw, a sign of stock accumulation followed by a rapid sell-off, as when the not-so-smart money is drawn into market to buy, the professionals take their profits. Other things smart money can offer in addition to investment dollars: insights. Through partnering with many entrepreneurs, VC companies, and seasoned angel investors build their portfolios, so it's no secret that there have been countless business thrives and fails. Budding companies should use years of experience from investors to get answers to concerns they may be facing and avoid pitfalls. Recruiting. Investors with smart money generally have large networks and portfolios, so they have access to large pools of people. Startups should look to their founders for assistance in hiring anyone who may otherwise be difficult to find with a specific skill set. More funding. Finding the right investor can have lasting beneficial effects on the financial future of a startup. In order to get other investors interested, smart money will spread the word, provide companies with investor leads to follow up on, or even continue to invest in later funding rounds. Introductions. Good investors can also use their networks to make connections, much in the same way that smart money can assist with workers hiring. If a startup seeks commercial or strategic alliances, the network of an investor could be used for the benefit of the startup. Promotion. When a business invests in smart money, they are interested in the long-term sustainability of that company. With that said, by supporting and sharing it with new investors, consumers, and markets, a good investor can be the biggest evangelist of a business. Assistance. Startups also have to make difficult choices. Whether to restructure, pivot, or build strategic alliances, startups should harness their investors' market expertise to better manage difficult choices and to be the driving force behind their requisite action. Coaching. Lacking executive leadership skills is not unusual for entrepreneurs, since experienced investors deal with all sorts of leadership styles on a regular basis. They can share their practices with entrepreneurs to help them be the best leader for their company. However, there is no one-size-fits-all startup financing solution, so it's up to entrepreneurs to seek advice before seeking some kind of opportunity for funding. That said, it can be a great benefit to seasoned founders who share their expertise, advice, networks, and tools with their startups.